Thank you so much for joining us today. My name is Greg Lewis. I'm the Director of Marketing here for Metastock, and this is our live event for today. Well, actually, we have two live events for today. This is the first of the two live events. This event, the first one, is Sagar Nandi, and he will be talking about how to find perfect trade setups or something. I'm sorry, I don't remember exactly what he's talking about, but I'm sure it'll be awesome. He's a very pleasant and very knowledgeable person when it comes to trading and investing generally. If you haven't heard about Metastock, we are purveyors of charting software and premium market data for traders, active traders, just like yourself. And right now, it looks like Sagar is just now coming online. So right now, we've got about 6 minutes before we get going. I'm going to go ahead and play a little video so you can learn more about Metastock if you don't already know all about us. Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat. Okay, thank you so much. That's who we are.
hey, why don't you let us know a little bit more about who you are, and make sure that when you're coming on today, give us a shout out, say hello, let us know where you're viewing from. I can see that there's several of you here already. Please go ahead and say hello. We always appreciate the feedback and the interactivity. We are broadcasting this, simulcasting this on GoToWebinar as well as YouTube today. It doesn't really matter to us which one you view. That's pretty much the same experience. However, the recording will be here on YouTube. So when you want to watch this, just come back to where you are right now. And if you hear me talking on that, that means you're either watching it live, and we're starting here in 2 minutes, by the way, or it means that we haven't had a chance to edit this out. We usually edit the part about me talking in the pre-show out of the recorded version. So if you are watching this and it's recorded, just scan forward another minute or so and you'll get right to the presentation. I should also let you know before we leave here that we have another webinar today, as I mentioned before. That's going to be, let's see, currently it is 1:30 local, and that is at 4 local, which is 6 o'clock Eastern. So 6 o'clock Eastern this evening, we have the ever esteemed Dr. Alexander Elder, and he's going to talk to you about trading for a living. So if you haven't registered for that, go to metastock.com and go to webinars so you can register for that, or just come right back here. This would be a good time for you to like and subscribe and hit the bell, which is the notifier, and that'll let you know when we have live events. And if you do that right now, it'll let you know we have a live event this afternoon. Likely. I mean, I think that's how it works. Okay, sorry about that. Watch is going crazy. All right, so we got about 1 minute. I'm going to go ahead and mute myself and make sure that they're all good to go over there. Thank you so much for joining us, and successful trading.
All right. Hey, everybody. Hope you're doing well. My name is Jeff Gibby. I'm the Director of Sales here at Metastock. I'm going to go ahead and I'm going to read a legal disclaimer for you. So get ready. Today's demonstration is designed and easy to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So I hope you're doing well today. I want to say thank you for coming. Thanks for joining us. If you're on YouTube, make sure to like and subscribe. It helps quite a great deal. And let's go ahead and kind of talk a little, introduce our guest speaker and get him going. Sagar Nandi has been a partner with us for a number of years. One of the things that he does a lot, really, really well, is he's one of the better users of the Zenith program that I've seen. They've done a lot of work around Zenith. He also does a really good job inside of Metastock with his superior profit stuff. But in any case, this is Sagar Nandi. He's been a partner of Metastock for a number of years. And how are you doing today, Sagar?
I'm doing fine, Jeff. Thank you. How are you doing?
I'm doing great. Let me go ahead and I'm going to make you the presenter.
Sure.
And that should be coming through to you.
Okay. Give me 1 minute. I'm trying to choose the right screen.
Take your time. Take your time.
Okay. Are you able to see my screen?
Yes, I can see bullish signals weekly.
Okay. Great. Thank you.
No problem. I'm gonna get out of the way.
Sure. Thank you. Thanks, Jeff, for the introduction, and thanks to all of you for joining me today. I thought of making a presentation on workflows that may match your trading style that gives truly high probability trades. I am Sagar Nandi. I used to work in IT. I retired about 10 years ago at the age of 46. I'm now swing trading stocks using the systems that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi, where I explain how you may take high probability trades combining technical analysis with market, sector, industry, fundamental, and even seasonality analysis. That is what I'm going to explain today using live systems. I specifically asked Jeff to schedule this event during market hours. I hope I'll have some time left to use the live systems during market hours. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. The systems that I use are Q Global and Q Finder for technical analysis, charting, and scanning. It also has the capability to do market breadth analysis. Runs on real-time or end-of-day metastock with Zenith data. For fundamental and peer analysis, I use Q Vital. Runs on metastock Zenith. For sector industry rotation analysis, I use another system, Q Edge. Again, runs 100% in real time on metastock Zenith. And for market analysis, I use Q Index. Again, 100% real time on metastock Zenith. And the other beautiful thing about these systems is they run on global markets, certainly on the USA market, but also on other markets, including China, Japan, Hong Kong, UK, Australia, India, etc. I'll use these systems today. Now, using these systems, our aim is to find high probability trades by aligning forces from multiple dimensions. I call this 360 degrees trades because I'm looking at different angles to choose the best trade that I can. These dimensions are many. At the highest level, it starts with the market level. As any experienced trader knows, the market level is the most important level. IBD, for example, says that 50% of trading success is decided by whether we are right on the market. If it is a bullish market, we take long trades, and if the market is bearish, we stand aside, or if we are willing to take short trades, we may take short trades. The market level may be analyzed from multiple angles itself. One example is to look at market using very useful advanced decline breadth of the sectors, industries, and stocks, and looking at it across multiple time frames, 1 month, 10 days, 5 days, 2 days to 1 day. In real time, we may also track the same information for the current day. This advanced decline breadth shows how the market is transitioning from real time to 1 month. And we can see from this picture that the 1-day period is bullish. In all Q systems, green and cyan are bullish, magenta, red are bearish, yellow is neutral. So 1-day period is very bullish here. 2-day is also the same. 5-day is not so bullish. 10 days more bullish than bearish, and 1 month is certainly bullish. This may help us decide that are we going to take long trades or short trades at the market level. If I am doing very short-term trading, then the immediate direction is bullish. However, I see 5-day period is bearish. So if market turns down now, it may give a swing high and turn down, thereby allowing me to take low risk short trades. That is very useful, and also we may find it extra useful by looking at it in real time. This is the advanced decline breadth from sector to stocks across multiple dimensions. Then we can look at the stocks in the market using bucket analysis. This is also a market level insight. What is bucket analysis? You may imagine all the stocks, let's say S&P 1500 stocks, a reasonable size universe. Take all the stocks one by one, decide its normal price range. Using standard deviation or using Bollinger Band, you have a normal price range for each of those 1500 stocks. You divide that normal range. The range itself is different for different stocks, but you divide the normal range into 10 equidistant buckets and number them 1 to 10. Then looking at the current price of each stock, you drop the stock in the appropriate bucket. If the stock is right in the middle, you may drop them at 5, 6. If it is at the higher end of the normal range, you drop it at 10. If it is at the lower end, you drop it at 1. If the stock happens to be outside the normal range, then you drop them in the greater than 10 bucket, and if something is below the normal range, you drop it in the less than 0 bucket. So we have 12 buckets. 10 are equidistant buckets, 1 to 10, and then we have 2 outlier buckets, greater than 10 and minus 10. Once you drop all these stocks in the 12 buckets, you calculate the percentage of stocks in each bucket and then draw the distribution. If the market is normally distributed, it will look like a bell curve. I'm not drawing an exactly bell curve, but it should be a bell curve if it is normally distributed. What is the use of this? Sometimes you will see that the percentage of stocks in the most extreme bucket is jumping to 30, 40, around that range. When you see that, then you know that market has moved to an extreme, to the upside, and it is time for the market to pull back. On the other hand, sometimes you may see that the number of stocks in the lowest bucket, less than 10, is reaching 30, 40% or so. You know it has reached an extreme at the lower end, and it is time for the market to come back from the lowest extreme. This extreme analysis helps us to know whether it is time for a pullback or time for a retracement. In this particular picture, the uppermost extreme is only at 5.7%, the lowermost extreme 0.5%. It is not at 30% level or anywhere close to that, so it can go either way. Market can go either way. Now, is the market bullish or bearish? We can also know that from here by looking at the percentage of stocks that are above the midpoint of the bucket analysis. And we can see here 61%, is above the midpoint, so it is slightly more bullish than bearish. Now, why are there two pairs of lines in the bar chart? It is showing today's percentages and comparing that with yesterday's percentages. So the solid colors, the green and red solid colors, are for today, and during market hours it will show in real time. The light colors are for yesterday. So we can see, for example, in the uppermost bucket, the percentage of stocks jumped from 0.9 to 5.7. In the lowermost bucket, it came down from 2.4 to 0.5. That is bullish. And we may see that across all the different buckets. Another insight you may get from this bucket analysis is that sometimes you will see the percentage of stocks in the most extreme bucket is jumping in one day by 10 to 15% or more in one day. In this example, it is 0.9 to 5.7, not more than 10%, but sometimes it will jump by 10%, 15% or more. That is moving too fast, too much. And that is also an indication that a pullback is probably imminent, and a similar conclusion may be arrived if the percentage of stocks in the lowermost bucket jumps by 10-15% or more in a single day. And we may again observe all this in real time. For the pie charts, it is showing that in one day, percentage of stocks to the right of the midpoint increased from 46% to 61%. So it's about 15% gain. So that is a considerable gain. Whenever you see more than 10% stocks are moving across the midpoint from left to right, that is bullish. If it is moving from right to left 10% or more, that is becoming bearish suddenly. That is another market level insight that we use. So we saw at sector, industry, stock, advanced decline breadth to assess the market, how it is transitioning from bearishness to bullishness or vice versa, from 1 month to 1 day and real time. And then from bucket analysis, we saw how the stocks are distributed across their natural range. After that, we drill down further inside the market, like with a stethoscope, and look at market internals. And here, in this particular study, that is market breadth total view, daily interval, we are looking at 6 indices and gathering the insight from the 6 indices in a single chart. We are looking at NASDAQ as a whole, NYSE as a whole, and then 4 major indices, S&P 1500, 500, NASDAQ 100, and Dow Jones. The aim is to see how the market is doing as a whole, looking at 2 exchanges, 4 major indices. What are we looking at? We are looking at some movement across major moving averages. The yellow line is showing the percentage of stocks that are above the 50 MA, 50-day moving average. And in this picture, it is at 60% level. A few weeks ago, it was above 80% here. So we can see the percentage of stocks above 50-day MA is gradually coming down. We can read the line relative to the 80% level, relative to the midpoint 50% level, or we may also read it relative to the thin average line. In all the respects, it is now showing weakness. It is below the average line, and it is coming down from 80% level to 60% level now. And again, this is not for one index, it is for the 2 exchanges, 4 major indices, all insights combined together. Then we may also look at the similar statistics, percentage of stocks above 200 MA. This indication is of course slower than the 50 MA calculation, and we can see it was well above 80%. Now it has crossed below 80% and crossed below the average line. So this is also showing weakness. We also have the percentage of stocks where 50 MA above 200 MA. In this picture, that is still hovering near 80%, very high level, but it is starting to come down. Then at the bottom, using the band indicators, we can see the accumulation day for a particular index in green or distribution day in red. Accumulation means majority of stocks in that index or exchange went up, that is accumulation, and went up with significant volume. Distribution means majority of stocks in the exchange or index went down and went down with significant volume. These accumulation distributions are collated together and plotted as accumulation counts in cyan or green, or distribution counts red, magenta on the candle chart. What we have observed is no major market drop has happened without distribution count of at least 2 or more. What is the use of that? The market is at a very high level. When it is so, we are looking for distribution counts to appear at the right edge. If distribution counts become 2, 3, 4, 5, 6, then we are very cautious. Is there any distribution count in recent days? The last one was an accumulation count that was from Nasdaq 100. Prior to that, we had another accumulation count of 2 that was from Nasdaq exchange, NYSE exchange. Before that also accumulation count. So in recent days, there is no distribution count. There was a distribution count of 3 at this point, but since then, we have seen only accumulation count. We'll see what happens today and tomorrow, but unless we have distribution counts of 2 or more, we are not going to be worried too much that market is going to drop sharply and suddenly, because that has never happened before. It may also be used, this accumulation distribution counts, as an indication of reversal at extreme low. So if the market has dropped, for example, by 15%, 20%, and then we start seeing distribution counts of 6, that may be getting things a bit overdone on the downside, and we may start to look for a reversal, maybe an accumulation count, very strong, 5, 4, 6, and then start to buy from the lowest point. So it may be used to predict or anticipate, I shouldn't say predict, to anticipate a possible sharp drop, and also at a very low price level, if market drops there, we may use the accumulation distribution counts to anticipate a reversal to the upside. Then we have this thin line plotted on the candle chart between 100 and 0 that shows the 3-month new high low. What is the use? This is also kind of overbought, oversold indicator, but it is a breadth indicator. It is calculated not even on one index, it is on the 2 exchanges, 4 major indices together. And you will notice, unlike stock level overbought, oversold indicators, once it reaches the extreme level to the upside shown by the 2 parallel lines, or extreme level to the downside, it has not hit the extreme level to the downside in recent days. Once it reaches the extreme level, it doesn't stay there. The index, here we are looking at the candle chart, that is S&P 500 ETF, SPY. The index may not drop, it may continue to go up, but you will see the 3-month new high low inevitably comes down once it hits the upper end. What does it mean? It means at least some stocks are pulling back. Once we know that, once we know it has hit an extreme level, we may then look for the stocks, individual stocks that are at extreme level and showing reversal signals, and try to book profit in them, or even try to short them if we have a low risk short setup. That is another way of looking at the market. That is not all. The mega cap stocks have significant impact on the market. We could look at the mega caps one by one, but what if we could look at the mega caps as an index, let's say mega cap top 20. It will include all the mega cap tech stocks and also some non-tech stocks, maybe one or two banking stocks or communication stocks. It's constructed based on the top 20 mega cap stocks in the USA market. This is a custom index, and what we are looking at how the custom index mega cap top 20 doing relative to the market. This is plotted like an usual stock chart, and we can see overall it is in an uptrend, going up with higher high, higher low. And the relative performance line, this copper color line, is showing that at the right edge it is outperforming the market. Also, it has the automatically drawn smart trend lines that is telling that in case this trend line support is broken, then we have a cause for concern. Why? Because that will create a lower high and lower low by that time, and the immediate support will also be broken. Not only that, we have the indecision at the top indications. Those are useful cautionary signals to catch the swing highs and book profit in swing long trades. So if somebody took a swing long at the low point of the swing, one could book profit at the upper boundary, or one could hold on to see if the indecision at the top signals are coming and book profit there. This is a standard technique that we use called go with flow trade setup, going with the swing highs, swing lows, buy at the swing low, put stop just below that, entry point somewhere here. Once it reaches the risk distance, book profit, or wait for some kind of weakness to book profit. So we look at mega cap to see, are mega caps doing worse or better than the overall market? In this picture, it is doing better at the right edge. Lastly, we want to see the technical breadth of the market as a whole. Not technical signal on mega caps top 20, not even technical signals on one stock, but technical breadth of the whole market. That is calculated by Q Finder on the stock universe of your choice. The stock universe I am using here is all the liquid stocks in the USA market and S&P 1500. It has about 2,500 of the most liquid and diverse stocks. What am I looking at? I am looking at the technical breadth. First, I look at all the signals. Green is bullish, red is bearish. In this picture, 96% of all signals are bullish. If I drill down, strength signals, 98% bullish. Continuation, that is trend continuation, 97% bullish. And trend reversal signals, 89% bullish. These are technical signals across the entire trading universe. And we have the breakdown of the strength signals, continuation, and reversal signals. When the all signals are bullish, I am going to look for long trades. If trend continuation bullish, I am going to look for trend continuation trades. If reversals are bullish, I am going to look for reversal long trades. Sometimes this also alerts us about possible reversal. In a healthy uptrend, the price level of stocks from where the bullish signals come, that price level should be in the middle, the yellow zone. In this picture, we see the percentage of stocks giving bullish signals is 54. They are already at very high price level. So this 50% of the bullish signals are coming from stocks which are already at an extreme high price. That is a warning signal that it is getting overbought, overheated at technical breadth level. This is similar to the bucket extremes, but it is calculated on technical breadth using actual trading signals, not using the normal price range of stocks. They are different. Normal price range movement doesn't mean we'll have a low risk entry, but this technical breadth, technical signals tell us whether we are having trade setups. Which trade setups? I will come to them shortly. So this is the technical breadth again at market level. So what we have looked at so far, we have looked at sector, industry, stock, advanced decline breadth, transition from 1 month to 1 day. Then we looked at the bucket analysis, movement of stocks across their normal ranges. We further looked into the internals, the movement of stocks in aggregate across their major moving averages and the accumulation distribution count and 3-month new high low. We looked at mega cap top 20 and technical breadth. That completes the market level analysis. Once we do this color code basis and candle chart analysis, we know if the market is bullish, we should take long trades, or if the market is bearish, we should stand aside or take short trades. Once we decide the market level, the most important level, then we want to know which sectors within the market are strong and which are weak. So we now come down from the market level to the sector level. And here we are looking at the sector performance, comparing the performance between 5-day period, 10-day period, 1 month period. We could do that also between 1 month to 3 months to 6 months to 1 year, or we could do a comparison between real time to yesterday to 2 days to 5 days in many dimensions. What it is showing? It is showing in this picture, for example, that energy sector is the strongest overall. Over 1 month, it is up by 9.8%. Over 10 days, up by 11.7%. But over 5 days, it is actually down. So that helps us book profit probably in energy long positions and wait for the next leg up. Which one is the worst sector as per this picture? Infotech. It's down over 5 days, down over 10 days, down over 1 month as well. So we may stand aside from this sector. Materials is also up over 1 month, over 10 days, but down over 5-day period. Very similar to energy. So you may find it very useful to book profit in long positions. Energy was very strong, material was very strong. Now this picture is showing some weakness. That would be the perfect time to book profit or to hedge your position. This is showing the comparison across 3 periods, but I would like to also see the sector rotation across longer period. And that you can do from the sector scorecard that shows the rotation of the sector from 12-month to 1 month period. And then because we are going to make trading decisions on current date more frequently in the recent period, 10-day score, 5-day, 2-day, 1 day, and during market hours in real time, the last column will also fill up. All the 11 sectors are listed here. Immediately from the color coding, you know utilities is the weakest and it is weakening. In the middle, it tried to strengthen. Earlier, it was the worst performer, tried to strengthen rapidly, but now weak again. You may look at the numbers. Some people are numbers people. I just look at the color. It shows the transition or rotation of sector across different periods. How to use it? For example, in this picture, it is showing as of the current date, energy, consumer discretionary are strongest. So I'm going to look for buy setups in energy and consumer discretionary. Some people use 1 day, some people use 2-day period, some people who are little bit longer term may use 5-day period score to decide trading direction. I tend to use real time. There is also another way of using this rotation scorecard, that is using acceleration, that is shown by the pace columns, acceleration over 1 day, 2 day, 5 days. Using acceleration, you would like to buy from the most accelerating sectors, which would be energy or healthcare. Interesting, isn't it? Healthcare was weak for a long time. On my website, I am sharing several healthcare, very strong fundamental stocks, trying to catch them at the bottom. And when I see healthcare as a sector is accelerating, that is also encouraging me to keep an eye on those stocks. So you could use the scorecard to look for the strongest sectors or the most accelerating sectors to look for buy setups. You could also look for the weakest sectors or the most decelerating sectors to look for short setups. Now, sector level is very broad. We may not be able to make meaningful trading decisions using sector level. Why? For example, materials. Material sector has gold, it has steel, it has chemicals, it has wood forest products. They are not necessarily correlated. Just because materials is weak here doesn't mean I shouldn't look into materials. Maybe gold is very bullish. Maybe steel is decelerating. So we need to drill down from the sector level to industry level to see the industry strength. We could look at the best industries. Here it is showing 1 day period. We could look at different periods. This picture is showing department stores is the strongest by far, went up by 11% on this day. The second best performer went up by 6%. Diversified real estate activities. That may be opening up from COVID restrictions trade. It is showing the industries that are strongest. Again, like sectors, I would like to see the rotation across multiple periods. And here I am able to do that. Look at all the 147 industries across 12-month period to real-time period. Use the score, sign strength, to buy in the strongest industries, or use the acceleration also to buy in the strongest industries. Some people like to buy into strength, breakout traders, for example, IBD style. They may look at apparel retail. Apparel retail had been strong for a long time and it is continuing to be strong. That may give breakout trades. My personal favorite are turnaround trades like diversified real estate activities, which was very weak. In fact, it was the worst performer over 3-month period, and now it is the second best performer. This is as of 14th May. We'll look at the live systems shortly. I favor these turnaround candidates. Turnaround in terms of industry strength here. Later on, I will show you how to find turnaround candidates in terms of fundamentals and certainly turnaround candidates in terms of technicals. You could look for turnaround trades, catching the bottom trades, or you could look for breakout trades in industries that had been strong for a long time. You can see there are several turnaround candidates here: independent power producers, energy traders, turnaround candidate, diversified real estate activities, also internet and direct marketing retail. Once we have assessed the strongest sectors, we have looked at the strongest industries, next we move to the fundamental level. Many people stay away from fundamental analysis because it is confusing. One dimension may say stock is strong, some other calculation may say stock is weak. Some analysts will say it is a buy, some will say it is sell. Inevitably, it happens like that. Some people upgrade a stock, some people downgrade. All the systems that I use, they are unambiguous. You saw that in the sector rotation, industry rotation, bucket analysis, from the breadth transition of sector industry stocks. The same I have done for the fundamental level as much as possible. There are different ways of choosing strong stocks, fundamentally strong stocks. I have simplified it by looking at 6 quadrants. Here I am looking at the top 10 stocks over 1 day, 5 day, 10 days, and 1 month. Let's look at the 1 day period to illustrate the concept. We have 6 quadrants. We have 2 dimensions. The x-axis is earnings growth. The y-axis is valuation score. These cross points are deciding the 6 quadrants. What are the 6 categories of stocks I am looking to buy or not buy? The first choice is 3-star candidates. Those are high growth stocks and undervalued stocks at the same time. Undervalued as well as having great earnings growth. That is 3-star stocks. Later on, I will show you how you can smart filter for those stocks. That is the first choice in terms of buying fundamentally strong stocks. Second choice is either undervalued or high growth. That is the second choice. What is the third choice? Third choice is stocks that are still showing earnings growth, but already it has become overvalued. This is also growth. This is also growth. This is also growth. The difference is that 3-star is growth with undervaluation. This is in the middle, growth but medium valuation, and the orange color is warning sign. Still possible to buy them. For example, breakout trades at the top for growth stocks, they are still high growth, but they are already overvalued. Best choice is, of course, 3-star. It's a kind of turnaround candidate. Next choice is medium valued, but no growth. This is a convince me kind of trade. If I am going to buy medium valuation stock, but not having any growth, I need to be convinced on why am I buying it. Maybe the industry is very strong. Maybe they came out with a new product or technology, or they are expanding into new geographies, or maybe they appointed a new CEO or marketing head. Unless those compelling reasons are there, I am reluctant to buy the medium valuation, no growth stocks. And the last category is stocks that I avoid. Those are overvalued with no earnings growth. There is no reason in terms of fundamentals to buy them, though technically they may give good setup. But that is not the stock I'm going to buy. We are discussing a technique to find the highest probability trades. How to do that? To align forces from all levels. We did that from market level, sector level, industry level, and we would like to do that from fundamental level. Therefore, focus on 3-star stocks first. We may also buy undervalued or growth stocks, may be cautious about buying growth stocks that are overvalued. Mostly stay away from medium valuation stocks with no growth, and certainly avoid stocks that are overvalued with no growth. That is a simple technique to know what stock to buy, what not to buy, or what you may look for shorting. Now, how to find these stocks? We have, again, at the stock level, the stock fundamental scorecard. Here you may analyze the constituent stocks of any index in any country. Or you could look at a stock list of your choice. Maybe high growth stocks, maybe undervalued stocks, maybe high beta stocks, maybe stocks where earnings are coming up. What I tend to do is I just create a list of liquid stocks. Normally, it doesn't make sense to trade illiquid stocks. The spread, bid-ask spread is too wide. So normally traders focus on liquid stocks. I just create a list of liquid stocks, calculate the scorecard of all the stocks, then use the smart action buttons at the top to find the 3-star stocks I mentioned earlier, or 1-star that is either undervalued or having earnings growth, or I could simply look for undervalued stocks, extreme high earnings growth stocks, or high earnings growth, not extreme, but high earnings growth across 3 quarters, 2 quarters, 1 quarter. I could look for turnaround, that is from negative to positive turnaround earnings growth, or improving earnings growth. Not from negative to positive, but simply improving earnings growth. These are for the quarterly period. I could do the same selection using yearly period. High earnings growth for 3 years, for 2 years, latest year, from negative to positive turnaround, or simply improving. I could also look for stocks having short squeeze potential, look for stocks where earnings is nearby, stocks that are moving up with high pressure, or stocks that are simply moving up. Instead of creating separate lists for growth stocks, value stocks, high beta stock, I am able to use this scorecard to maintain only one list, liquid stocks, and do all the analysis in real time. In fact, in the scorecard, it is not in this particular snapshot. If you went to the right, you could find other useful criteria like performance from 1 month, not 1 month, from 12 months to 1 month, then 10 day, 5 days, 2 day, 1 day real time. Just like we saw for sector industries, you could find the ratios like P ratio. If you are interested in the ratios, you will find beta stocks, high market cap stocks, etc. So I use this scorecard to implement my 6 quadrant of fundamentally strong stock identification to quickly look at the stocks and see which ones are moving now. And you will find stocks are always moving in all kind of markets. On this day, again 15th May, STX, for example, the top stock went up by 12%. How is the fundamental? Let us read it out. In terms of valuation, just look at the color. It is medium valuation. In terms of earnings growth, it is not so strong. If you look down, on the other hand, HAE, it is undervalued stock, cyan color, undervalued, but no earnings growth. So it is a 1-star undervalued stock. Is there any 3-star stock? Yes. Here, huge earnings growth, for example, EBS, undervalued, 15,200% earnings growth in the last quarter. In the previous 2 quarters also, high positive accelerating earnings growth. And even if you look at 1 year, 2 year, 3 year period, very high earnings growth. So this is a 3-star candidate, undervalued with high earnings growth, even revenue growth. On top of that, it has great earnings quality, meaning its earnings is repeatable quarter after quarter. It is from positive business, and it has a short squeeze potential. It went up by about 6% on 15th May. So we have multiple stocks. We have STX that went up by a higher percent, fundamentally not so strong, and EBS, a 3-star candidate with great revenue, great earnings quality, short squeeze potential, went up by 6%. Which stock would you like to buy? The choice is yours. That's why I titled this presentation, Finding a Workflow that Matches Your Style. What is my style? I would like to align as many forces as possible So I tend to favor stocks like EBS. First choice again is for me, look for 3-star, then 1-star. Anything other than 3-star, 1-star, I need to be convinced. For 3-star, 1-star, the decision is easy. Makes life simple, isn't it? So we have looked at market now. We have looked at sector, industry, market internals, mega cap. We have looked at fundamentals. Now finally, we don't make money unless we buy a stock and it goes up. How to identify technical trade setups? I use unambiguous setups. Why I call them unambiguous? Whether I am looking at the trade setups or you are looking at it or a class 10 student is looking at it, my theory is that they should come to the same conclusion for the same stock, let's say 95% of the time. That is what is unambiguous. How to achieve unambiguous trade setups in a system? To use unambiguous checklists. If you remember the chart for megacap top 20, everything was color coded. In fact, the Q charts don't have any parameter to be set. There is no indicator where you need to compare with thresholds. So each indicator in itself, green is bullish, red is bearish, yellow is neutral. Each indicator in itself is unambiguous, and we have a defined checklist for all the trade setups. That makes the checklists or the trade setups also unambiguous. And I have defined only one trade setup for a particular market condition. What are the market conditions? It can be a trend following market going up with higher high, higher low. There I am going to look for go with flow or trend following trade setup. Sometimes the market is in a overall uptrend, but in the intermediate range, it might have come down. Come down where? Come down to a robust support. It has pulled back to a robust support. Maybe on a shorter term period, it is looking like lower high, lower low, but it is overall in an uptrend, pull back to support, and then starting to go up. In that case, I'm going to use the pullback trade setup. Both are trend following, but in go with flow, it is strong trend following, didn't pull back, and the pullback setup in the intermediate range, it may be in downtrend, but overall in an uptrend, pull back to support and going up again. So once we know the market condition, we apply only that checklist. Then we have the breakout setup, that is when a stock is breaking out of trend line resistance to the upside for buying, trend line support. If it breaks trend line support to the downside for shorting. Again, if it is a breakout condition, we are not going to try to apply go with flow setup, not trying to apply pullback setup. We are going to apply only breakout setup. Sometimes the market is neither trending nor breaking out. For example, I think IWM, Russell 2000 right now, it is moving inside a range, inside a box. In that market condition, we have a well-defined setup called box setup. It can be used for instruments moving inside a range, or you may use it at double top, triple top, double bottom, triple bottom. You may also use it as an undercut and rally setup. That's a box setup for sideways market, double top, double bottom. Then we have a bounce setup. Sometimes, maybe due to earnings disappointment, some other news, a stock drops suddenly and sharply. Suddenly and sharply, and drops to where? Drops to right at a pre-existing trend line support, or it may also come to a deep pivot level, horizontal pivot level. We call it watermark. It can come to a watermark support, deep watermark, or it may come to a trend line support after a sudden drop, stops there and starts to go up from there. We try to buy right at the bounce point. It's a bounce setup. Again, it has an unambiguous checklist. And lastly, and this headwind signal is useful at the market technical breadth level also. we have a setup that tries to identify when a stock has been in an uptrend for a long time and then showing some headwind signal. The uptrend is entering a headwind, and we may look to book profit or look for a short setup. Similarly, if the stock was going down for a while with lower high, lower low, and then it starts to show bullish headwind, then we are looking for a possible bullish reversal. This is useful for individual instruments. It's also useful in aggregate. For example, if multiple market ETFs or multiple global markets are showing bearish headwinds at the same time, we are cautious. If same instrument across daily, weekly, it is showing bearish headwind, we are cautious. And certainly at technical breadth level, if many stocks, I showed you the technical breadth chart earlier, if you see large number of bearish headwinds in the weekly interval, that is time to be cautious. That has helped us to catch the peak every time market has dropped. This accumulation distribution count, the excessive outlier percentage in bucket analysis, and the bearish headwinds. Now these trade setups are only 6, but you may or may not use all of them. Some people are breakout traders. They may only take breakout trades. Some people are trend following traders. They may take only trend following trades. Some people prefer pullbacks. Some people like to take bounce. Bounce, headwind, these are extreme reversal trades. They give lucrative trading opportunities. You may choose the trade setup that matches your style. Again, it has to match your own style. Different setups, different market conditions, but something is in common. What is in common? All of them are trying to buy a low point in some way or other. Always trying to buy a low point or short a high point, except the breakout trade. Breakout trade is breaking out from a trend line resistance. It is not trying to buy a low point, it is buying a breakout. Again, it's a personal style whether you prefer breakout trades or not. I take breakout trades only when the stop loss is not very far. If the stop loss is far, I don't take the stock at a breakout point. I wait for a pullback and then to go up again, which will in fact be a go with flow long trade setup. So it again has to match your style. I am comfortable taking all the trades. Now, how do I find these trades? Remember Q Finder that shows us the technical breadth in aggregate. It happens that the same Q Finder can find the trade signals for hundreds or thousands of stocks. And you may do multi-dimension analysis. You could just look for trend following trades, bounce trades, reversal headwind trades, box sideways market or undercut rally trades, breakout trades, pullback trades, or you could flag different columns and see if a breakout is happening with a bullish flow and use additional conditions like is it happening with bullish pressure, not just breaking out with high volume, significant breakout. Is it associated with gap up? Did it have a reversal candle? And certainly you could also look at the stocks that are moving most. In this particular picture, I have sorted the stocks moving by percentage change one day, and then you could look to the left to see what kind of signals the stock is giving. Let's read the top row. This stock went up its daily interval by 44% in one day. Was there any bullish signal? Yes, the orange color cells, incidentally, they are today's signal. If you see some cell in green color, that is yesterday's signal, and blue color is this week. So Q Finder is not only telling us today's signals, but giving us the history, what happened yesterday, what happened in the week. And if we look at the gray color areas, what happened previous week or before that. Usually I focus on the orange color cells for trade setup and look at green and blue to see what happened during the week. Yesterday or last 5 days. Let's read the first stock. HYRE, higher car incorporation. It went up with bullish pressure, went up by 44%. It gave a possible pullback setup. All the setups we need to confirm using the checklists by looking at the chart. Finder is doing as much calculation as it can. We still need to look at the charts to confirm the checklist. The Finder is saying that this stock went up by 44%, gave a possible pullback setup, possible go with flow trend following setup, and also a possible box setup. So that is an attractive candidate. You could also sort the stocks by the number of signals coming today, number of coming signals, total signals in aggregate today, yesterday, number of signals over 5 days, etc. Different ways of finding trades. Usually, again, if you are having a particular style, you like only breakout, then you will flag for only breakout trades. If you are only trend following trader, you will flag for only go with flow trades or pullback trades. If you are trying to catch the very bottom, you will look for bounce or headwind. If you are looking for sideways market, double bottom, double top, you are going to look for box trades. So we are able to now find out stocks that are in a bullish market based on market level analysis, in strong sectors, in strong industries, with strong fundamentals, with unambiguous technical setups. Is there any other dimension that we can align with our trades? Yes, there is one more. I told you these are 360 degrees trades. That's the last dimension, and that is not a requirement, not in every month of the year, but some month of the year is different from others in terms of seasonality. For example, if you look at the USA market, again, the Q systems can be used in all countries. You could look at seasonality for Hong Kong market, China, UK. But if we talk about USA market, April is a very bullish seasonality market for USA. Therefore, if you are in the month of April, we have already passed April. If you were in the month of April, then you may look for seasonality, strong seasonality trades. Align that dimension as well. But now we are in May. I will show you later. May has neither bullish nor bearish seasonality. In that case, you may not try to align seasonality of the stocks. But if you wanted, you could again have a list of all your stocks and find the stocks with the best bullish seasonality in the current month. Or we are coming to an end. You could find the best bullish seasonality stocks in the month of June. And then you may look for buy setups from there. You could also use the smart filters to look for bearish seasonality and look for shorting ideas from there. You could use this seasonality analysis to look at hundreds of stocks and find the strongest bullish seasonality and then look for trades from there. Or you could just do a top-down analysis, meaning look at market, sector, industry, fundamental, technical. If everything is aligned, you just check if the seasonality is bullish. You may have both of these approaches implemented. Now we have aligned all the forces. Now, how to achieve this using an easy-to-use workflow that is also in real time, 100% real time. There are multiple workflows possible. I will demonstrate 4 possible workflows. One is top-down, where you start with QH, sector, industry, rotation, go to fundamental analysis, find the strongest stocks, and then go to look at the technical setups. That is top-down. Another way would be to use bottom-up, look at Q Finder to find technical signals first, then to check its fundamental strength, finally confirm that the industry is strong. Or you could do fundamental first. You look at fundamentally strongest stocks first, then you could check their technical strength, and from there come to industry strength. Or I have not having seasonality in this diagram, you could start with bullish seasonality, and then once we find the bullish seasonality stocks, you could look at their fundamental or technical, and lastly look at industry strength. Whichever workflow you are implementing, you would like to align as many dimensions as possible. Maybe seasonality is nice to have, but all the other dimensions I'd like to align. Now let's demonstrate that in real time. This is QH, sector industry rotation analysis. I showed you the bucket analysis earlier, and now see market just closed, but is still showing the real-time performance. Let's see, today the percentage of stocks in the uppermost bucket jumped from 3.3 to 9.3. That's bullish, not at 30%, not at an extreme, didn't jump by 10% or more, didn't go up too fast too much. Percentage of stocks above midpoint bucket analysis went up by 9%, that is bullish. If we look at real time, sector industry stock advance decline, 73% sectors are up today, 79% industries up, 70% stocks are up. That is bullish. 8 sectors went up, 3 went down. Which ones went down? Utilities, real estate, consumer staples. All of these are defensive sectors. So market was bullish today in real time. And these diagrams will change in real time, 100% real time. Now, if we look at the 1 month to 1 day, and now we can see real time, now we see that this picture is now bullish. There is no other way of putting it overall. It's not possible to take short trades and make profit in the market. Now let's look at the sector rotation. Most sectors went up, non-defensive sectors went up. So I'm going to look at the sector rotation top-down analysis. Let's look at the real-time score. Materials is strongest, then energy, then financials. Let's choose the topmost, materials and energy. I can do top-down, not one by one. I could select multiple sectors. I'm choosing the strongest 2 sectors, materials, energy, and I would also like to choose the most accelerating 2 sectors. Those are materials and financials. I drill down into the industries, the industry rotation scorecard, everything in real time. Now, these are the industries from all those 3 sectors. Again, I'm looking at the strongest industries, or I'm looking at the most accelerating industries. Now I'm drilling down into the stocks of all these strong or accelerating industries. Where are these industries? In the strongest or accelerating sectors. These are the underlying stocks from S&P 1500. Let's choose the 3-star candidates. These are the stocks that are undervalued with great earnings growth, and they are going up by significant percentage. Let's look at SXC, for example. Now from here, I could look at the chart, or I could look at seasonality. Let me demonstrate both. Incidentally, both of the top 2 stocks, 3-star stocks, are in steel industry. And then you can see a lot of regional banks. So certainly we could look for regional banks. Let's look at the 2 steel stocks. Look at their charts. Okay, I had some charts open. Let me close all the charts and go back. Let me open these 2 3-star candidates in strong industry, strong sector. One is TMST, Timken Steel. It is in a strong uptrend after creating a base, steadily going up. Today it is bullish, but it has an upper tail. If we apply, I mentioned we have unambiguous checklists. Where are those checklists? If we go to sagarnandi.com, my website, this checklist icon. If you click there, there will be checklist for the unambiguous trade setups. I'm applying the checklist in mind, takes only a few seconds. It's very bullish, but I wouldn't buy today because of the long upper tail. I could buy on this day. That would be a go with flow setup. So TMST, I'm not going to buy today. Let's look at the next one, SXC. SXC is giving a breakout setup. It's a valid breakout setup. Stop is not so far. There is a small upper tail. That's a concern. I could wait for tomorrow morning looking at the upper tail, but it's giving a breakout setup. Breakout from trend line resistance. Now, if I went back to Q edge, instead of looking at the charts, I could highlight the two stocks and look up their signals from Q Finder. And you can see, even before opening the chart, I could see from Q Finder that Timken Steel has a gap up. In fact, both of them, these two steel stocks, have gap up open. Suncoke Energy is giving a breakout setup. Both are having bullish flow. And there was a bullish reversal in Suncoke Energy this week. There was also a pullback setup in Suncoke Energy this week. They went up today. So I could look at the technical strength of the stocks I selected from Finder, then open the charts from there, or I could open from QH directly. Let's look at some regional bank stocks. Now, instead of using this workflow to choose regional banks, why don't we do another thing? Let's now do the bottom-up analysis. So I went back to Q Finder, and this is today's data. I just ran it before the webinar. The overall bearish versus bullish picture, all signals bullish, strength bullish, continuation bullish, reversal bullish. This is weekly period. And today's period, technical breadth bullish. We saw sector industry breadth bullish earlier. Now we are seeing technical breadth is bullish, though there are some bearish reversals, but overall it is certainly bullish. So I'm going to look for primarily bullish trades. Technicals first, so bottom up. And these are the stocks went up. Some went up by very large percentage. Now I may be interested in breakout trades. Let's flag for breakouts. I want to choose breakouts with high pressure, flag for pressure. I am left with 21 stocks. Now I could go from here to chart, or I could go from here to fundamentals. And you can see these stocks went up by significant percentage in one day, today's picture. Let's go to bottom up. So from technical, let's go to fundamentals. I'm now going to look at these stocks, retrieve data from Zenith in 100% real time, calculate their scorecard. It has done so in few seconds. Look at the scorecard. Look for 3-star candidates first. I have one, VSAT. Undervalued with earnings growth, went up today in real time 6.8%. Am I going to look at the chart? I could, but instead it's a bottom up now. Let's look at the industry strength for this stock. What is the industry? Communications equipment. I'm going to look up the industry strength from Q edge. First look at the graph. Okay, the relative strength came down a little bit for the primary industry. For the secondary industry, it is steady. Though it came down, it is still strong, and the industry in itself went up by 1.3% today. What about the industry rotation? Let's look at the rotation. It was weak earlier, strong now. It's a turnaround candidate in a way. So I am allowed to buy. Let's look at the stocks chart now. Let's go back to the scorecard. It was VSAT. So let's look at the stocks chart now. We have found a stock from Q Finder, breakout trade. You can see it broke out from trend line resistance with bullish pressure. That's what we looked for. And we saw it is fundamentally 3-star in a strong industry. So this is giving a valid breakout trend. Let's go back to Q Finder. Sometimes we may have signals, we miss it when we read the chart. So let's go back to Q Finder, read all the signals for VSAT. Let me highlight that. It went up with bullish pressure from price extreme middle. So it is not at extreme level yet. Remember, I told when majority of stocks are going up from high price level, pendulum high, and giving bullish signal, that's overbought condition at the market level. But this stock itself in the medium pendulum level. So it's not overheated yet. It went up with bullish pressure. It broke out. We flagged for that. It also has a gap up open. Those are today's signal, orange color, and green signal yesterday gave a possible pullback setup, possible go with flow trend following setup. And in the current week, 5 days, it touched a trend line support, bounced up from trend line support, went up by 7.13% today. Let's look at the chart again and read those signals. Broke from trend line resistance with bullish pressure, had a gap up open if you see carefully. In the week before, it pulled back to yellow line and went up. That's a pullback setup. It came to trend line support, touched that, and it bounced up from that. So all the signals, sometimes we may miss to read from the chart. You may use the finder to do that. So we found a possible breakout trade setup in VSAT 360-degree trades. Is it everything? No. One thing we didn't check yet, that is seasonality. It's nice to have, I mentioned earlier, and let me show that. Let's check the seasonality for the market. Let's see for SPY for the current month. Nothing is stored in my computer. You can see April is strong bullish seasonality. Very high. Usually I use seasonality if the percentage is around 80% or so. So April is strong bullish seasonality. Next is November. May is bullish but not enough to use seasonality for it. So when that is the case, in the month of May, I'm probably not going to look for seasonality in individual stocks, but why don't I check it up anyway for VSAT, and all the systems are integrated. I could navigate from one to another. For VSAT, you can see the month of May, the seasonality is 46%. So it's not enough to decide a trade based on seasonality. That's fine. Seasonality is nice to have for me. Interestingly, if you see average when up across these 24 years, average when up percentage is 16%, average when down is only 8%. So that is favoring a bullish trade in the month of May, though not based on seasonality. And if we look down, in 2013, it went up by 44%, 1997, long time ago, 52%, another year, 18%. These are the metallic colors. Those are the years when it went up by bigger percentage than average went up. In any case, the seasonality is nice to have, and May doesn't have enough bullish seasonality here. We found a breakout setup nevertheless that is in a strong fundamental 3-star. Those are great to buy. 3-star candidate in a strong industry, technical setup. Those are two workflows, top down, bottom up. If you allow me to have 5-10 more minutes, let me, and you can see I'm going fast. You may later use the, I think it is being recorded, the recording to watch it slowly. Let's do a fundamental first. Some people like fundamental. I like fundamental. So as I mentioned, I just maintain high level list like liquid stocks, or if I am only interested in buying mid-price stocks, I'm actually not going to look for high price stocks much. And low price, no, they may be more speculative. And stocks with liquid options. So let's look at the mid-price stocks. They tend to move enough. Let's do a fundamental analysis and look for 3-star candidates or 1-star candidates. And this is the fundamental first workflow. I created a universe that I'm comfortable with, liquid stocks, mid-price stocks in this case. Now I'm doing a fundamental first workflow. Finally, I'll still end up with 360-degree trades. It's retrieving data. I don't store anything on my computer. I don't like to manage folders. let Zenith do the hard work and Q system do the hard work for me. Give it a few seconds. It has done the calculation. If I was not doing the webinar, it would have been even faster. It calculated the scorecard after retrieving data for 1,647 stocks. Again, 3-star is the first choice. And you see these stocks, great valuation, great earnings growth, and they are going up by significant percentage. Why don't I focus on them? Let's highlight the stocks that went up by at least 4%, very high percentage. I could look at more, but let's look at stocks that went up by up to 4% today. That itself is a long list. Now let's look at their technical signals. So I am going from fundamental to technical, and maybe I am a breakout trader. I flagged for the breakouts. They went up by significant. Remember SXC, Sankok Energy, we saw that already. Let's look at CNDT. We didn't see it. Look at that stock. Okay, let me close the existing charts. Let's read the signals for CNDT. Gap up, and it is at price extreme high, pendulum high. So it's breaking out, but breaking out with gap up, but from a high level, maybe IBD kind of stock. Those are today's signal. Green is yesterday, gave a bullish flow, went up by 7%. Let's look at the chart. CNDT, very nice breakout from a high price level. Shown here, pendulum high or price extreme high. So this is breakout from high price level. A valid trading strategies. Many high growth stocks go up, and it is high growth, isn't it? Because it's a 3-star candidate. CNDT. Let's go to Finder. Let's do a full fundamental scorecard analysis. I don't just look at the scorecard relative to others. Now I am using the stock as a root stock and do a peer analysis. So I started with my liquid stock, mid-price stock universe, found the 3-star stocks, looked at a nice technical setup, but I'm thinking, why don't I do a peer analysis for CNDT? Maybe it has other stocks. So now I'm focusing on the peer stocks. What peer? In the same or similar industry. In other countries where the market is not so broad, you could look for sector peer or even country peer. Let's stay with the industry peer. For USA, that is enough. Industry and similar industry. Undervalued stock with great earnings growth, accelerating earnings growth with a short squeeze potential. 71% of 95 peer stocks in data processing outsourced services went up today. This stock went up by 5.7%, and you could carry out all this in real time. Earnings, next earnings, 4th August, some distance away. The stock is making money. $7 stock, low price stock. Average volume 1,800,000 per day average volume. So enough volume is there. High beta as well, 1.89. So fundamentally it is strong, technically a breakout setup at the top. What about industry? Now it's time to look up the industry graph and industry rotation. Just a click away. I could do it soon after market open. Now relative score is coming down, still strong enough. No. So okay, it refreshed the data. Actually, relative score improved for data processing and outsourced services, up by 0.7%. Let's look at the rotation. Okay, the rotation is not so strong, not very weak, weakening, not very strong. So industry is telling it's not the best candidate, and there I stop. Technically, it's giving a nice setup, fundamentally strong, but the moment I see industry is not aligned, why will I buy? Because I have other 360 degrees trades where everything is aligned. So though technically it is a nice setup and some traders may take it personally, I find stocks that are strongest. So how to do that, I demonstrated. So this was fundamental first, and let's do one last workflow. Let's do seasonality first, and for that let me use the stocks that are having liquid options. Check their seasonality first. Again, no data is stored in my computer. I transferred all the stocks with one click to seasonality program, retrieving data and going to calculate the seasonality. It will be done in few seconds. Let me have a sip of my coffee using those few seconds. Okay, seasonality is calculated. Some of the symbols are outdated. Maybe they merged with other stocks. No problem. Let's look at the seasonality scorecard. We are in the month of May. Single click, I can find the stocks with strong bullish seasonality. These are great, no? 100% for most of them, bullish seasonality in the month of May, but not so great when you see how much history they have. Most of them have less, actually, most of them below 5 years and all of them below 10 years. That's not enough data to rely on seasonality. So what am I going to do? I'm going to look for stocks that are having at least 10 years of data. I just click the number 10 button and then look for bullish seasonality in the month of May. Okay, I have two stocks, Coca-Cola and ON. They have bullish seasonality. Now, from here, I checked bullish. They have the best seasonality. We don't have anything above 80% with at least 10 years of historical data to calculate seasonality. So I could look at Coca-Cola, for example. Now, drill down into Coca-Cola seasonality. April was bullish. April market was also bullish seasonality. I could look for that. May is also good. Nice seasonality for Coca-Cola. Percentage went up 5%, 0.1. Percentage went down minus 2.5. So that is also favoring a long trade. How is Coca-Cola's fundamentals? Now see, I started with seasonality. Now I am going to check the fundamentals of a stock that has bullish seasonality in the month. Coca-Cola. It is doing the scorecard calculation and I can use that time to check out its industry, soft drinks. Doing multitasking using queue systems at the same time. Okay, the relative score came down a little bit. The industry is still up today. Let's look at the industry rotation. It was weak here, strengthen, little bit weakening today. Maybe we are still allowed to buy. Didn't weaken a lot. I prefer to buy when it is transitioning from magenta to cyan, not the other way around. But this is a demonstration of the workflows. Let's go back to the fundamentals. Medium valuation, some earnings growth. It's a consumer staple stock, Coca-Cola. Don't expect high earnings growth there. We could buy it. Let's look at the chart finally. It's already up too much. It may be a buy candidate here using bullish headwind. Remember, I mentioned about the reversal signal that came here, or I could buy the first go with flow trend following setup after the bullish headwind. Those are attractive buy points, not after the stock has gone up so far. By the way, I was watching, there is another Coca-Cola related stock, Coke, and I wanted to show that, taking this opportunity. See how this stock went up like a rocket. This was the point we could buy it using go with flow setup. It was identified using finder. We could buy it around this point using the headwind setup. Now I wanted to show one thing. Both are Coca-Cola related. One is COKE, one is KO. Let's check the fundamentals of COKE. We saw Coca-Cola has medium valuation, some earnings growth. And if we look at the other Coca-Cola company, Coca-Cola Consolidated, see its fundamentals. It's great. 3-star, isn't it? Similar stock, maybe related stock, undervalued stock, high earnings growth. For 3 quarters, 3 years. That is the kind of stock we would like to buy. 3-star stock at the proper buy point, here or here or here, and then take those high probability trades and try to make enough money, more than risk in each trade. So those are the 4 workflows that I use. There are other workflows possible. All the systems are integrated. You could move from one to another with a single click. You could do top down, bottom up. fundamental first, seasonality first, or you could mix and match. I think I have crossed 1 hour point. From my side, let me end the session here. If you have any question, you may always contact me using my email ID, and feel free to follow me on Twitter, where I regularly share live analysis, this kind of 360 degrees analysis, and also on YouTube channel, also on my website. That is all for today from my side. I'll be happy to answer any question you may have. And if not, I will pass it to Jeff.
Hello. Hey, Sagar. Thank you for that. I really am very, very impressed with all of the spreadsheets and kind of the work that you've done. Are those something that's available to the public? Is it possible to get a copy of your spreadsheets?
If anybody goes to the website, sagarnandi.com, it's hidden at the bottom, shows how much interested I am to market this. At the bottom, you could, of course, go for Metastock, or you could use the Edge Vital Index Seasonality. I didn't show all the programs. I have a way of tracking the trades in real time, P&L, and hitting target or stop using diary. I have another system for index constituent analysis. Those could be procured from here. Global, Q Finder, that can be procured from here.
Awesome. And that the website address for you guys is sagarnandi.com. SAGARNANDI. I'm going to put that in the chat. We don't have a lot of questions today, Sagar, but that was very good. I appreciate it.
My pleasure, Jeff. And thanks everybody once again for giving your time to join me today. I look forward to seeing you again in the future. Thank you.
Okay. All right. Thank you. Thank you, everybody. We'll see you at the next event. Stay healthy.